Okay. Yeah, I'm on top shelf, thanks. This is the last webinar for some time. I've got to fly down to Sydney tonight for the courses next week. So the next webinar, Q&A webinar, is on the 21st. So let's only got a couple of emails to go through. First one is was sent to me during the week about a risk profile. After the last boot camp went to, he was looking at this. Just one question. This is a very interesting analysis, and I like the way he's approaching it. Just the one thing I'd do question is in terms of the drawdown. I think this might need to be adjusted. Firstly, it's like once you hit 5%, you can't lower your risk. If you're 5% down, the account is suspended. So I would restructure this, take this whole row out, and maybe have a few more in here, such as 1 to or 0 to 2, 2 to 3, 3 to 4, and then 4 to 5, and structure it that way. That's the only comment I'd have on this. Otherwise, I think this is fabulous the way you analyse things. And here you've got your risk profile, and your exposure to individual currencies. I think that's a good way of looking at things. So it's great. A question came in this morning. I did reply to you via email. Yes, Barbara, I am well. Thank you very much. I did reply to your email. The question was, you can during the course you mentioned you can trade in the lower time frames, i.e. 4 hourly or hourly. Hourly we will be, I'll be introducing next week. But you can trade the shorter time frames. The question was, do you agree with the 4 hours better to trade because I can't be at the computer for every hour? And that's the thing I wanted to discuss out of that email was absolutely. If you cannot manage the trade on the time frame you're trading on, if you're trading the 1 hour on the phase 1 on the 1 hour chart, and you can't manage it on the 1 hour because you've commitments through it in other areas of your life, then do not trade the 1 hour. You might start a trade on the 1 hour that goes for 12, 15, sometimes 24 hours or even longer. And if you can't manage it, then I wouldn't be prepared to get into it. 4 hour might be a bit easier, that you come back to the charts every 4 hours. It gives you time to go and do things because you don't manage it any between it. You just come back to the next 4 hour cycle. So yes, the question was, is the 4 hours better to trade because you can't be there every hour? Absolutely. Once you reach 5%, if you can't have any risk, how do you start again? Okay, if you go down 5% and your account is on the hedged book, you go down 5%, then your account will be suspended for a month and then reopened with the starting balance on the unhedged book. If you then go down 5% on the unhedged book, your account is suspended for a month, and at the end of the month period, it's reopened with the starting balance. Okay. Any money lost on the hedged book must be clawed back because that's real funds. Any money lost on the unhedged book is it's demo trading effectively, so it doesn't have to be clawed back. So, but if you've gone down 5%, there's something inherently wrong, so we suspend you for a month, and we try and work out what went wrong, whether it was the market, whether it was your trade selection, trade management, or the psychology of your trading. We try and discover what went wrong through coaching sessions with your coach, and then hopefully find a resolution to those issues, and at the end of the month you're reinstated for trading, and away you go again. I hope that sort of answers that question. Okay. Right. have this question on the pound Swiss. I think this is a bit messy. Yes, it's a bullish bar and you can potentially trade that. I just see it as rather messy. However, you've got higher highs and higher lows. Yes, in the cycle of this, you do. You're above the moving averages. Yep. EMA support. Yes, horizontal support. RSI convergence. Okay. Bullish price action, fib retracement, trend line support, fib retracement went from there to there, 50%. Yep, look, that's all fabulous. My concern is this large bar here. You know, I do like the pound, and I do think it'll outperform the Swiss and the euro. I just see this. It's a little bit messy. I mean, if you go to the weekly chart, you should always look up a time frame. It's not that clear. I mean, you can look at, okay, there's a bit of a channel, and it's here, it's bounced off that channel, and it should be making its way to up here. But it's not an easy. It's not going to be an easy one to trade. You'll get into the trade, and you'll have sort of can get aggressive moves against you that knock you out. And I believe some people potentially took this trade anyway off this ring low here, and obviously would have got stopped out due to the volatility around the ECB and the BOE last night. So it's a tough one to trade. The questions in your email say, the current £1 Swiss long meet all the rules, but the daily bar is an oversized bar. Should I take this trade? Well, that would depend on your risk reward. I personally wouldn't trade that. That's, you know, it's almost 200 pips there. I wouldn't take that. I would look at the lower time frames. About trade management, I have two trades running in favour for me, Aussie Kiwi long and the CAD Yen long. For Aussie Kiwi, I presume you say Aussie Kiwi, it says AUDNED. Should I move the stop loss below yesterday's bar? For the CAD Yen, I got in on the 7th. Should I move my stop loss? Okay. CAD Yen, I am long for the fund that I trade, but I got in over here, which is what day, the April. So my stop is now at break even, being underneath this bar. If you got in on the 7th of May, which is this day here, that's your buyer bar 1, buyer bar 2. Okay, so you wouldn't have your stop at break even, but you have a reason to move your stop having 2 consecutive buyer bars. Okay, you've seen this ring low, you got in on this bar, trade the bar is your first bar, buyer bar, this is your second buyer bar, so you can move your stops underneath this. It will certainly reduce your risk. It won't clear your risk being at break even or better, but it'll certainly reduce your risk, and you have a fair reason to do that, so I would, yes. As to the Aussie Kiwi, not sure how you got in. I'm not sure how you've got in or managed to stay in with this pullback, but yep, you've got 2 strong buyer bars. Your stop should be underneath that. Unless you sort of got in off this ring low, your stop would be quite large. But yeah, I'd be looking at going in underneath your stop underneath that bar and reducing your risk. Absolutely. Personally, I had this trade and got taken out, and I'm still looking at it, still like it, but we'll be looking at this shorter time frames to find an opportunity. That brings us to quite the sort of rest of the questions and the emails. You were going to say that. Say what? Sorry. The rest of the emails. Sorry, not the rest of them. One of the emails says trading in the shorter time frame. Well, we've covered that. Okay, that's not really. Let me start again. Next email is about the Chinese currency. I shorted this a couple of days ago because we had divergence. You can see the divergence across here. Yeah, and I went in under here, and we're trading at short. Stops above this now here. This is, again, this is not on the proper count. It's on another one. But the question is it's currently trending upward and has been since Feb. Yeah, so the Chinese currency has been getting weaker. They effectively intervened in the currency back here. In early February, they intervened, trying to weaken their currency. My chart history in AxiTrader doesn't show the history on this, but it's had a long run down from 8 all the way down to 6, and I think it was even higher. But 8 was the previous peg that they had. So it has been a long-term downtrend. It's turned around when they intervened, and effectively you're just getting a sort of a mini phase 2 coming in here. And seems to be reacting to the 20 EMA. There is a slight pullback ring low, albeit with a non-committal bar yesterday, presents an opportunity to enter this trade. Yeah, I mean, as I said, I've got my stop loss above this, and we'll take a minor profit out of the trade. But if there's a support line there, which you could suggest is off that high there, you know, you've got that ring low. You know, you could suggest that 618 is offering support, and there's even bullish hidden divergence if that's the cyclicity you're looking at. Insert. Yeah, kind of reacting to it. But if that's your cycle, there's even hidden divergence there. You know, you've got higher lows, but your momentum is a lot lower and coming off the sort of oversold area. So potentially, yes, there is a trade there. I was going to say there was an entry. Was there an entry on the Aussie Kiwi? Yeah, I didn't see it personally. I was looking at taking it the other way. The Kiwi is the China. This particular pair 3 decimal places. No, it's the pip calculation is on the 4th. So it's 23.25. 1 pip would take it to 23.26. So you can see here that it's 25.34. So it's a 9 pip spread on this with AxiTrader. Okay. Still no sound. Still no sound. Sound gone. I'm not sure why the sound's gone for you, Barbara. It seems to be fine for everyone else. Okay. So yeah, that's all that. That's that email. Done that one. Okay. So a gentleman asked why the CAD is considered strong. Fundamentally, CAD has been weak. Technically, the dollar CAD has a long trend, but can we tell? How can we tell this has stopped? One of the easiest ways to work out if a particular currency pair is strong or not, if you can't see it in the majors, such as the against the US dollar, the US dollar CAD. One way to have a look is just go through all the pairs. I don't have a pair for the CAD, but I've got all the Aussie pairs under one tab, British pound under another, euro under another, US dollar and yen. But you know, you say that the dollar CAD has been in a strong uptrend, so been weakening. Yes, it has. You know, we can see this is the monthly that the CAD has been stronger at times, and it's now getting a little weaker. And so technically, you know, we're stuck in there, and that's what you're looking at as pretty much the range. That's why say in my report that I see the CAD as being arranged because I think fundamentally it's turned the corner, it's hit the bottom of the economic cycle. And the US is also gaining strength in its economy, so this particular pair will struggle to sort of trend for a bit now. But if you look at all the other pairs that the CAD's aligned with, such as the Aussie CAD, the Euro CAD, the CAD Swiss, even the Kiwi CAD, all of these pairs, the CAD is the stronger pair. If the pair's falling and the CAD's the second side of it, then the CAD is the stronger pair. Okay, the Aussie CAD itself is going sideways, so they're both around the same strength. So going to the fundamentals, you say that the CAD has been weak fundamentally. Yes. Let's just look at, I've already put the filter on this. This is for the last month, the month of April. We can see that all the figures here are starting to pick up. The PMI figures, if they're over 50, it means they're in growth. If they're under 50, it means they're in contraction when you get a PMI figure. However, yes, it missed the mark of 58, and it's a bit slightly lower than previous. However, it's still in growth. Unemployment jumped. Housing seems to be a bit of a struggle for the Canadians, but that's not the end of the world. They're a commodity-based currency like Australia. Manufacturing is up. Security, foreign purchases is stronger. CPI is holding in there. It's not growing, but it's well, it is slightly growing, but it's only a small amount of growth in the inflation side of the economy, and that's why I think it's, you look back over the previous months, over the last 12 months, it has been performing poorly, but it's stopped performing poorly. It's not setting the world on fire, but at least it's stopped falling. And I see that's why I say I think it's hit the bottom of the economic cycle and starting to turn. All these figures are pretty good. GDP is not huge, but it's stopped falling. Okay, if we go to this month, again, trade balance not huge. Ivy's starting to fall a little bit. Building, as I said, is not strong. Then we get this one that came out last night that was a turnaround in the housing starts, and we've got unemployment tonight. So I think the Canadians have hit the bottom, and so fundamentally I see it, once you hit the bottom, you're not going to go much further. It's the only way is up from here, and you can see that in the charts. Maybe not so much against the US dollar, but certainly against the other currency pairs. Okay. Are you online actually? No, you're not. Okay. Okay. And the final question for today, Lucky Friday, is I mentioned the pound. There's no divergence and unlikely to get it. And the lower time frames may give opportunities next week. The gentleman asked, I didn't think you could do phase 2 if no divergence on the daily because it breaks one of the phase 2 checklists. That is correct. If there is no divergence, you cannot trade it. The Kiwi did not give divergence, so you cannot trade it on the daily time frame. All right. So we'll look at the Kiwi here. 14. Why can't you just default to like I asked you? So there's no divergence in the momentum here. However, there's an established trend. You can't trade it on the daily time frame. So we can then go into the shorter time frames and have a look at it. And you can see that in the hourly that there's reasonable cyclicity. In the 4 hour, we haven't yet to have the cycle underneath, but there is potential there. In fact, there was another one that I was looking at, Aussie Sing, wasn't it? Aussie, no, I don't want to trade that. Aussie Sing on the 4 hour was giving us an opportunity. Yeah, so if there's a trend that's already established, as we're seeing here, you can go down, if you've missed that, you can go down the time frames and look at potential entries. So going to the pound, now you'll see a trade on there that you probably shouldn't see, but I took this trade last night on the news. I'll just get rid of all this crap that I'm not watching. So daily, we have a look at the daily. There's no divergence. Okay, so this is a higher high in RSI. It's 84 versus 82, I think it was 81.8. So there's no divergence for us to trade from, but we have an established downtrend. Okay, so you could look at the shorter time frames. The 4 hours not yet finished. You can't trade the 4 hour. You're not trading phase 2 in the shorter time frames. You're trading phase 1 in the shorter time frame. So what we can look at is trading the phase 1 in the shorter time frame. So phase 1 is when price is moving away from the EMA. So we can look at that and go, well, let's trade that. If there's the cyclicity on the shorter time frame, we can trade that. Okay. I would not suggest trading phase 2 on the hourly, and I certainly on the 4 hour or the hourly not trade phase 2. You can trade phase 2 on the daily if there is divergence. All right? If there's no divergence, there's no trade. But once the trend is established, and this is the whole point of going down the time frames, once the trend is established, you can then go down, and you're not in the trade, or even if you are and you're risk-free, you can then go down the time frames, go down to the 4 hour, go down to the 1 hour, and potentially trade in the shorter time frame. And that's what I'm looking at with the Aussie Kiwi. Is I didn't see any entry there, so I'm now monitoring the shorter time frame to hopefully get the cyclicity and allow me to participate in this on the shorter time frames and get in on the trend that's clearly established on the daily. That makes sense? Are you online? No, you're not online either. Okay. Okay. So that covers everybody. Just ignore my trade just last night off the news. I shorted it and the euro. Went in under this bar after the news. Had my stop above there. I just moved my stop now to above this bar, and I'm targeting down here, which is just above the last 4 hour cycle, or the 50. But anyway, that's neither here nor there. So that's it for today. In terms of the emails, I've got a question from China. Is it USD CNH or CNH USD? Typing in USD CNH and eSignal inverts the chart from what you were showing on MT4. In eSignal, I wouldn't type in the USD part of it. I would just type in CNH space A0-FX. Yep, CNH. It is USD CNH. The US is the primary currency. So I would, in eSignal, it's just CNH space A0-FX. Or you can type in RMB, I think it's a renminbi, which is similar. Which would you say is better opportunity, Aussie yen or Aussie Sing on the 4 hour? Okay. Aussie Sing or Aussie yen? I prefer to be probably short the yen than short the Sing. Nothing against the Sing, is just I don't know enough about what's going on in their currency, whereas I have a clear idea of what's going on in the yen. This looks like a potentially stronger trend. If you link those two lows, we've got that touch up here. So there's more reasons, and you should always do this in even when you're trading in the shorter time frame, is do your research on the longer time frame and say which is this, how strong is this trend going to be? on the daily, how strong is the daily trend? You know, even though I've missed this, if I go back and look at this ring low and say, well, what would it score on my checklist? You know, does it score a 5 or does it score an 8 or 9? And therefore, this is a reasonably strong trend. We've got every reason to be in this on the daily time frame, but we missed it. So now we look at the shorter time frame. Okay, and so then we come into the 4 hour, and you go, well, that looks pretty good. There's obviously a strong horizontal across here that held price down for a while, you know, for a couple of days. If we get a ring low here with the next bar being a higher high and a back above this support resistance line, then that potentially is a good strong trade. So this is your Fibonacci, and you say, well, yep, we can establish that. Let's just have a look from there. We can establish that it's a reasonable entry. Compare that to this one here, the Aussie Sing. Also a reasonable strong uptrend. As I said, the only reason why I'd prefer the yen over this is potentially because I know more about the yen. This looks very much like the Aussie US. You know, on the weekly it's got lower highs, lower lows, whereas the Aussie yen on the weekly doesn't. You know, even on the monthly, it's a good strong trend. So, by all intents and purposes, to answer your question quickly, is I prefer the Aussie yen. The dollar yen has been in a range since February between 101.50 and 104. Could we consider a long range reversal if it sets up? Yes. As I wrote this morning, I'm a little surprised that you know, the Russian-Ukrainian issue is abating, and this is just going sideways. But yeah, you could certainly look at that in terms of trading that, either, you know, not there. Yeah, there's your extension, and you've got a horizontal here. You need to have divergence, and certainly at the right end of the scale to be buying it, because you know, how much further can it be get oversold with this support line here across these lows. So in that, yeah, you can look at that as a range reversal. Certainly going sideways, and the yen definitely not going to be getting. The only reason for the yen to get stronger is for safe haven flows, and as Russia sort of moves away from, you know, pissing everybody off in Ukraine, you know, this should therefore to have no reason to be strong. Okay, does this mean that if you stay in the trade for a shorter time frame as well? Yes. If you're going to be trading the shorter time frame, you stay in that time frame. Okay. And if you, that's what I've mentioned at the start, is if you can't manage the trade on the hourly chart, then you shouldn't be trading the hourly chart. Okay. So you should be looking at you know, the 4 hour or the daily. Trade the time frame on that you're doing it. You can get tricky and you know, maybe turn this into a 4 hour trade or turn it into a daily trade, but that's a more advanced level than what we teach at Knowledge to Action. With this particular one on the Aussie Kiwi, if I do get an opportunity, I'll once I'm risk free, I might look at turning it into a day trade. But even in the daily, what you want to be doing is just trading the time frame and focus on the time frame you're doing, trading the phase one on that 4 hour, because it will turn around as the daily then does. As the daily does a cycle, the 4 hour will turn around and knock you out. So you know, you trade the phase one on the 4 hour, and then as the daily does a pullback, you then you're getting out of the 4-hour trade and looking for an opportunity of on the daily time frame. So stay to the time frame that you're trading in. With the lot size calculator, does the value of the price in the top entry that is linked to the MT4 change when you change the currency pair? Does the value of the price... So does this value here, that won't change. The spread and the pip cost will change as this moves around. If you change, what do you ask? If you change the currency pair, no, Aussie dollar will always be the same, but the pip cost and pips and the spread is obviously generated from AxiTrader, and the pip cost is calculated based on the currency pair. So if you go to something like Aussie yen, yeah, the pip cost is going to be slightly different. If you go to let's go to Euro CAD, the pip cost is going to be different. Does that answer your question? Bob, does that answer your question? Right. Do you delete the webinars after a few days? No, they're still there. They're all still there on YouTube, on the channel, on the same channel. If you know how to use YouTube, you go to the channel that well, I load them to what's called my YouTube channel, and they're all still sitting there. You can go over webinars. I don't know if I recorded Wednesday. I forgot to record one of them this week. I can't remember if it was Wednesdays or Mondays. But yeah, they're all still there. Nick, can you convert it to a higher time frame? As I said, potentially you can, but that's more advanced trading than what we normally teach here at Notice Action. What I prefer you to do is just trade the phase one on the time frame you're trading it, and just focus on that. So if you're trading the phase one on the 4-hour, just trade the phase one on the 4-hour. In the 4-hour phase one, let's have a look at this. In this, you trade this phase one on the 4-hour, and as it pulls back, that's potentially giving you a setup on the daily time frame. Okay, so don't be trying to trade the phase two on the shorter time frames. Only do phase two on daily, and turning a 4-hour trade into a daily trade, I think is a waste of your energy. Just trade the 4-hour phase one, get in, get out, and then look at another 4-hour on the phase one later on, or look at the daily phase one. You can see this 4-hour pullback is the start of the daily phase two, and so you can be looking at this as this continues its phase two. Gets down through 68. Whereas the 4-hour, the 50 EMA is at 69, so as it gets 68 down here, it'll be doing a phase one underneath. So just stick to the time frame you're trading and trade the phase one on that time frame. Hi, a late comer to the webinar, I presume, is that why you're saying hi. What time will the 4-hour form a new bar? Easiest way to do that is look at the 4-hour up here on the top left above your currency pairs. You see the market watch. That's the best time you'll get, the most accurate time for news announcements and things like that. So it says 0534. This current bar, if you put your mouse on the closing bar, it says it's 0400. You can see the time there says 0400. So this bar started at 0400. So it's 1 hour and a half old. So the next bar is going to be at 0800. Yeah, that makes sense. So 00, 2000, you can see the time 1600, 1200, 0800, 0400, and you just check the time there so you know when it rolls over. When you say after a trend established on the daily chart, yes, you can potentially trade the shorter time frames correct? Only do a phase 1 trade, yes. Do you mean based on the cycles around the 50 EMA on the 4 hour, 1 hour? Absolutely. So, for example, Aussie yen, there is a trend is established on the daily. You know, we've had the phase 1 is starting. It's now too late to get into the trade. You're trading out of fear of missing out if you do it on the daily, because you're looking at about 150 pip stop. Yep. Which may not be too bad in the overall scheme of things, but the idea is that during these, you can see these parts here, when the trend is established, you're looking at the shorter time frames to get in on that trend. And during that time, you'll get the cyclicity on the 50 EMA in the shorter time frames, such as this cycle here, phase 1, phase 2 on the 4 hour chart. Just going back to that previous uptrend here, we can see that, hey, stop that, you. What I'm looking at is this daily uptrend here. You know, this trend here on the daily. Let's go and have a look at it on the 4 hour. And this is it on the 4 hour. So we can see that there's potential opportunities. You get little low test bars along and little ring lows on the 4 hour. And you could even look at the 1 hour during that time frame. Let's just do it. So that run up on the 1 hour was here. So we can see the cyclicity on the 1 hour would give us opportunities, but you're only trading phase 1 on the 1 hour. Just take the phase 1, get out, come in, take the new phase 1, get out. You know, so that's what you're looking at. But I'll cover that more of that next week in the Platinum course. Okay. That's about it for today, guys. No more emails. And if you don't have any more questions, we'll call it have an early break. Go for a long broker lunch on Friday. It's lunchtime for you guys, not for me yet. But you have a lovely weekend. For those of you who are coming to the course next week, I'll see you then. If not, I'll see you back here in this forum on the 21st of May. When will the manual be available? July. Printed version of the new manual that I finished last week will be available in July. They are unwilling to issue you an electronic version for obvious security reasons. You know, it's what do they call it? That intelligence, which I obviously clearly don't have. Yeah, you know what I'm talking about. We can't issue it electronically, so the printed will be in July. If you come to the course, you can obviously learn it and take notes. Bring a big legal pad and take notes. And but it's effectively just a prop strategy on the lower time frame, and just making sure you don't risk too much capital on your on the shorter time frames, and make sure that it's a good strong trend established, as I discussed today. Intellectual property, thanks, Ezio. Yeah, I don't have property, and I'm sorely lacking the intellectual either as well. We have another course in June, so June is the boot camp. I don't know if there's a course in June. June should be just the boot camp from next week's course. I think the next course is in July. Looking forward to the course, although only online. Yeah, I'll not be able to get across to Sydney. Okay. Cool. I shall see you, and you have a safe and wonderful weekend. Cheers, guys.